Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Ankur Mishra. Now let's get you some more news updates. Now exchanges may soon have to align their weekly expiry days for derivatives trading, as the SEBI is all set to issue the final circular to reduce volatility. Ankur, what are you picking up from your sources on this front?
Yes, ET Now has been consistently reporting on this matter. As you would remember that NSE had earlier applied for a change in expiry from Thursday to Monday, after which SEBI came into action and stated that there can be only 2 expiry days. However, that was a draft circular whereby it was mentioned that Tuesday and Thursday can be expiry days. So, on Tuesday, most of the BSE FNO expiry happens, and on Thursday, NSE FNO expiry happens. But now we understand through sources that NSE has applied for Tuesday being an expiry day, and that may be under consideration. However, the final details will only be known after SEBI actually releases the final circular where the application has been granted or not. We will come to know, meaning will there be a change in the expiry of 2 exchanges. But for now, we understand that it was discussed in the secondary market advisory committee, and all the scenarios, if this change happens, what will be impact on BSE, what will be impact on NSE, all that study has already been happened. So the ball is in the court of regulator, and we may see the final details on the expiry change may be out very soon. But shifting focus to an important meeting which is happening today on dividend transfer, where we understand that Reserve Bank of India will decide on the surplus transfer this year. Remember, last year there was a record transfer of 2.1 lakh crore by government, by Reserve Bank of India to government, and the expectation this time is even more. The economists are penciling in somewhere between 2.5 to 3 lakh crore this year. In fact, some of the economists have also mentioned that it could be even more than rupees 3 lakh crore this year. But you should keep an eye on the buffer which this time Reserve Bank of India keeps. Last time it was kept at 6.5%. So all eyes will be there on the important meeting of Reserve Bank of India, and we may see the dividend announcement coming soon.
If you like this video, then like, share and subscribe to ET Now.